Hey, good morning. Let's go over today's trade plan. So the main catalyst this morning was the non-farm payroll or the employment report, and so far we have seen a rejection at that 97 to 99.5 resistance zone that we were using overnight, and the sellers have been active off of that zone. On the downside, we had support at 81.75, and we saw responsive buyers jump in the market at 82. So now heading into the open, the market is still trading within a balance. We know that we're seeing activity from both sides. The larger time frame bullish bias is still very active in the market, and you can see that on this breakdown attempt and a move down to 82, where responsive buyers jumped in and pushed ES all the way back up and above the swing high prior to the non-farm payroll. So heading into the open, the bias is fairly neutral. We've seen a rejection at resistance, and at this point, if we continue holding below the 2087 micro bull bear line in sand and below the 84 to 85 half area, which marks yesterday's low, then that would signal continued weakness, and perhaps from there we can head lower. But we still have to keep that larger time frame bullish bias in mind because that can still play out, and we can simply stabilize and balance. So today we are going to have to be a little bit more nimble with our intraday bias, because so far we've seen big moves in both directions on the employment report, and the sell side has been holding it below that resistance zone above. But again, off the open, if we start to balance and stabilize, things can change. At the same time, if we continue holding below 87 and 84 to 85 half, then there is potential to go lower. And that's exactly a reason why we have to be pretty nimble and neutral on the day time frame today, because right now the way the market is set up, if the larger time frame participants who have been bullish actually step in, if the larger time frame buyers step in, then we can even get a move back above the 96.75 to 99 quarter initial resistance zone. That's really the key resistance area on the day, and if we can stabilize and move above that, then it would bring those upper resistance zones into play at 03 quarter to 05 quarter and 08.75 to 10.75. Until then, the sell side can be a little bit more dominant, and we can just be neutral and balanced. On the downside, if we are holding below 87, below 84 to 85 half, then that just shows you that the sellers are dominant on the smaller time frames, and we can go down and test 78.75 to 81.75, and potentially even down into the open gap at 73.75. We have some support levels at 72 half, 75 quarter, below that 69 half, and then in range extreme on the downside would be 64 half to 66 half, and the balance area HVN at 62.75. But that's a range extreme, and that would still be an area where buyers can step in and reverse the price action. So right now, the main thing is that we don't want to go overly bearish on the market prematurely, right? So that means we have to actually see continued downside momentum to read this as a short-term bearish market, because the bigger picture is quite bullish, and even if we sold off today and got a deeper pullback, it still would not affect the larger time frame bias. That would continue to be bullish, and that's exactly why we have to be quite nimble and not really go overly bearish too soon, and still be very aware of trade location when you are initiating a short. And if there's really no bias active in the market in real time, let's say there's no real momentum, then we could just chop in a range, and it can just be two-sided activity. So for now, the market is trading within a balance, within a range, within the context of a larger time frame bullish environment. And that's exactly why, even though we can take shorts, we do have to be very aware of the trade location on the shorts. And if you are getting involved at very aggressive location and there's really no momentum behind the move, then that can be a pretty risky trade setup, because those larger time frame buyers can step in at pretty much any support area at this point. So those were the main ideas heading into the open. The main catalyst is out of the way already. So the remainder of the day we can just kind of process the information, and again, I think just be a little bit more neutral, but keep that overall bullish theme in mind. and we'll just have to see how the market develops in real time to really gauge the bias of the day. So far the sell side has been active, but again, the buyer stepped in as well, so it's very two-sided. So we will have to be fairly nimble off the open. At the same time, if you are unable to identify a high probability, high reward to risk trade idea this morning, let's say the market becomes quite choppy and there's really no momentum, then stay out, right? It's better to sit out and wait for the right setup than get involved, get chopped up, not really have any conviction, and it just leads to more frustration, and it can be a vicious cycle where you end up making even more mistakes, right? The mistake number one and two kind of add to the frustration and lead to even additional mistakes. So if you cannot identify a high probability, high reward to risk trade setup, then wait for better location, wait for a better trade. You don't need to be very active on the day time frame in order to do really well. Just one or two good trades a day is sufficient. And if no trade sets up, that's okay too. So be a little bit more cautious simply because the market is quite choppy and two-sided right now. Take that idea into mind. But the overall bias continues to be bullish. The short-term bias is kind of neutral right now. So those are our main thoughts heading into the open. Let's see, which side kind of dominates off the open. Let's see if the larger time frame bullish bias can become active again, and we'll take it from there.